Our next speaker is the Director for Payments Markets Initiatives, Asia Pacific at SWIFT. He leads payment innovations in the region in areas like instant payments and emerging technologies like DLT, Open API, and FinTech. So here to present DLT and the real problems in cross-border payments, please put your hands together and give a warm welcome to Rahul Bhargava.
Hi, everyone. Good afternoon. I was presented with this great topic for the discussion today, and I was asked to really talk about, at SWIFT, what are some of the approaches we're taking towards DLT. And I thought one of the key areas that we focus on as part of our innovation agenda is really looking at this problem area in cross-border payments. I just heard about, frameworks or technologies being 40 years, 50 years old, or taking 20 years to get adopted. SWIFT is now about 45 years old. And many feel that it's traditional and slow. And if I ask your typical cross-border payment experience, which, if you would know, every cross-border payment interbank typically goes over the SWIFT network today globally. The experience that you hear mostly is it's slow, it takes a lot of time, it's very opaque, non-predictable, and the experience is really not what you expect out of technology today. So let me just take a step back and first, instead of talking about DLT, let me talk a bit about the problem in cross-border payments and probably some of the initiatives that are trying to fix the problem itself. And then let's talk about the solutions and DLT as part of that may apply to residual challenges. So SWIFT today, just for information, it's a cooperative organization. It's a member-owned, not-for-profit, which connects 11,000 institutions globally and enables financial messaging. In terms of payments, that translates to the world's GDP flowing over the SWIFT network every 2 to 3 days. And every single message for the last 30 years plus that has gone between two banks over the SWIFT network took maybe 2 to 3 seconds. So again, a question to reflect there is if really that's the case, that it takes 2 to 3 seconds for a message to go from, say, Singapore to New York, why does the payment take days and weeks at times? And also, from a cost perspective, each payment message that is sent across, SWIFT only charges 2 to 3 euro cents to the banks. Another fact that many people do not realize. And all this is being done securely, resiliently, in a manner which is fully encrypted and is a security gold standard. So 3 years back, a group of banks and SWIFT got together to really look at what is the underlying problem. And if you look back at what I just said, technology doesn't seem to be the problem. If payments are getting processed across in seconds, technology does not seem to be the problem. However, at each step, where you see, for example, a trade here flowing between United States and Hong Kong and a payment related to that, there is friction at each step, especially when there are multiple banks involved. And this friction relates to business processes. It could be fee, forex application, some compliance, regulatory requirements, liquidity challenges that the banks face, et cetera, et cetera. Many, many challenges. So with this mix of the fact that the technology does work, and yet there are business process friction, there was an agreement made a couple of years back where banks and SWIFT looked at removing some of these frictions within the banks. And out of that came an initiative called GPI, or Global Payment Innovation Initiative. There's got a lot of words there, but let me just focus on the left, yeah? So that box there is actually a stack. And if you look at the bottom of that stack, it represents the SWIFT rails, the old traditional 40-plus years old rails that operate with speed, with efficiency even today. The idea was that the banks commit to certain rules that will change the experience to the end customer. And what are those rules you see on the right at the bottom? Addressing the core problems, right? The first one was speed. So banks agreed to actually credit customers the same day on receipt of a payment. Looking at transparency of fees. Many times you send $1,000, at the other end, comes 990. The $10 got deducted on the way. There's no visibility of that. So the banks agreed to be transparent to fees and share the fees as the payment get processed. End-to-end payments tracking. So a FedEx-like experience was created where in the cloud, Swift hosts a real-time tracker where as the payment progresses from point to point, there is full traceability in real time for all the banks in the chain. And lastly, a big efficiency issue in cross-border payments where the information within the payment message gets changed many times. So this was, again, fixed as a commitment that the information in the payment message will not get altered. So ensuring the reconciliation and other aspects continue to happen. Now, this was created as a set of rules. And then the idea was to actually create a serviceable platform that scales to multiple different use cases. So today, we are already experimenting with other aspects like, for example, cross-border real-time payments, enabling more real-time services like a stop and recall of a payment globally, and other things related to that. We also have a API ecosystem behind the service, which is opening up and looking at how these services can be reused by fintechs and PSPs for certain kind of overlay services and other use cases. So where is this initiative today? It started a couple of years back. It went live last year. And today, there are 300 over banks that are signed up. What that translates to is 80% of the cross-border payment flows over the SWIFT network. And interestingly, today, more than $100 billion US are being sent on a daily basis. But more importantly, there's a huge savings cost that has come through because there's real-time information available on payments. And this has resulted in a completely transformed cost ecosystem, as well as the ability to service customers. The end customer who did not have prior information on payments now can get that in real time. Banks are, in fact, offering this as a service, for example, via internet banking channels or mobile banking channels in real time to their customers. Now, let's come to speed. Now, what was interesting was, I mentioned earlier that the aspiration with this service was to achieve a same-day credit or 24 hours kind of a time frame, which was supposed to be, at that time when this was thought about, supposed to be transformational. But when the service actually went live, the experience in terms of actual data stated otherwise. So you see there, 95% of the payments get processed within 24 hours. Yeah? 40% are actually within 5 minutes. And when I say 5 minutes, it means the money reaches the beneficiary bank account, and a confirmation of that goes back to the sender. It's a confirmed credit into the bank account of the recipient in 5 minutes. And many were in seconds. So when this fact was realized, and this is pretty much an eye-opener for many. I'm not sure, if I take a quick poll of hands here, how many of you were aware that SWIFT can support a cross-border payment settlement in seconds? How many of you are aware of that? I see 2, 3 hands. Fantastic. That's the reality. It has moved. The technology and the removal of business process friction has really moved cross-border payments globally to the state today, where we are seeing more faster payments at scale. And what we're doing next is really looking at how the service can be extended further. So if you look here at the green arrows, right? So we're looking at a few use cases, how we can extend this cross-border, faster payment service forward. So the first use case is where, between 2 GPI banks, we see a payment being credited directly into the bank account. Now, this is already live, as I mentioned, since last year. And if I take an example, the fastest payment we saw between Singapore and Australia, I believe it took 9 seconds for the payment to get credited and confirmed back. Yeah? But we are now looking at extending this service, because one of the main problems that still exists today is that the cross-border payments are processed inward into domestic channels via the high-value payment systems, or the RTGSs as they're called, which typically follow an operating cycle within a 9 to 5, typically. Australia, for example, is 4:30 when they actually stop payments processing inward. Now, many markets today have real-time payment infrastructures which are 24/7. So if you just take a cross-border payment flow and are able to push it through a real-time 24/7 payment infrastructure, you can actually achieve a much more rounded and efficient 24/7 service as well. So we started a trial where we actually linked up payments coming from Singapore, Thailand, and China into Australia and then getting processed via the new payments platform, which is a real-time payment system in Australia launched earlier this year, and tested whether that linkage will work and actually what is the kind of speeds we are getting when we try and do this linkage. The trial was successful. We completed just before Cybos a month back, and we actually were able to realize an extended operating hours. Basically, we actually tested beyond the operating hours of the traditional high-value payment systems. We also managed to get speed. So at the bottom there, you can see some of the speed stats. 18 seconds was the fastest payment from China to Australia. Again, 2 legs, a cross-border leg and a domestic leg were completed. Money was credited and confirmed back within 18 seconds. And mind you, this was in the test environment, not a high-performance live environment. So this is where the actual direction of cross-border payments is going today. Why am I talking about all this is because I started with a question of what are the problems in cross-border payments. And with this background, I think it's really important for us to realize a set of problems around speed, around traceability, around predictability, around reach, and really having full coverage end-to-end. All these are getting covered today by some of these initiatives happening. What else is the residual requirement? And I put that famous quote up because at Swift, we believe in focusing a lot on the problem. And then end of the day, you look at what may be the solutions that focus and solve for that problem. So the problem is very clearly identified. We've solved for friction across the cross-border payments leg with the existing technology. There's nothing incremental that's needed. It's actually the old Swift rails still supporting faster cross-border payments. The question, of course, of DLT. Now, Swift is quite invested in DLT for the last many years. We have written quite a few thought leadership papers, run a few proof of concepts and proof of values, and really look at this ecosystem as still being very fragmented. And what is DLT trying to solve? The famous debate about is it a solution trying to find a problem or vice versa. We looked at it the same way. And we tried to really break it down into what we need to assess when we assess DLT technology. So this was a paper done by Swift and Accenture a couple of years back where we identified these 8 strong industry requirements that are needed for maturity when a DLT application needs to scale and apply to the industry. And we always looked at it from a perspective of when we are looking at a DLT application, it should be scalable to our entire community. And when I say that, it's 11,000 institutions globally. And looking at cross-border payment flows when it comes to the world of payments and supporting clearing and settlement as part of that. So you can see also on the right, our vision is really to evolve with the technology to ensure that we can scale, but with a caveat there when the technology matures and the business use cases emerge. And secondly, we believe that there's a lot of complementarity in what DLT intends to achieve and the way Swift operates today. There is distinctive benefits in reusing it in certain areas. On the right-hand side, you can see the actual maturity calculations, or rather, our maturity assessment. The blank circles are showing very, very low maturity. Now, this is a couple of years old already, so I'll put a caveat there that some of them definitely have improved over the last couple of years. But yet, there's a lot of work to be done. And the statement still stands to the effect that we believe from a core payments and clearing and settlement flow perspective at scale, at industrial scale, the technology may not be mature enough today to be applied, for example, over the Swift network. But there are promising developments, and there are a lot of experiments that we ourselves are doing as well to see where it can be applied. Very simplistically, we look at these few areas of application. So you have, of course, digital currencies, the whole transacting set in terms of cross-border and domestic payments. There's a lot of work being done by even central banks and by others in this space. And then there's a host of value-added services in which I put things like you have reconciliation, document management, invoicing, etc. And if I look at this, I think from our perspective, the majority of the work, the real work and outputs are coming out in the whole value-added space. In the other areas, specifically from a DLT perspective, there's a lot of experimentations, but in the real sense of a scaled industrial production output, there are not many examples today. So our focus was also on seeing which is the right use case to be applied. We stayed away from core payments, clearing, and settlement, as I mentioned earlier, at this point, and we looked at certain use cases. I'll pick up one of them. It was related very closely to something which really impacts cross-border payments, and that's related to reconciliation of nostro accounts of banks. Nostro accounts are basically where, for a particular bank, other banks or correspondent banks hold their money in another country for the purposes of doing cross-border transactions. So one of the biggest challenges banks have is that they're not really aware of the amounts that are maintained in those accounts, and they either are under or over when it comes to really settling end of day. And it's a nightmare to really manage payments as they happen on a daily basis. So the question was, can DLT help with that? The data showed that nearly 40% of cost related to payment operations and liquidity is really hinging on this question of, can a bank get more visibility on liquidity positions in their nostro accounts? And what we tried to take was, you look at the 8 characteristics of an assessment, and we said, we'll try and test some of these areas and do a proof of concept to really get a real-time liquidity and balance availability over a DLT framework. So governance, data control, standardization, and identity framework were some of the areas which were looked upon and tested as part of this experiment. There were 34 banks involved. It was on Hyperledger as a private permissioned DLT framework, and I believe it was probably the second largest Hyperledger pilot done globally till date. The end result, and I'll given the time, I'll jump to the conclusions and some of the insights. So the DLT aspect, the technology aspect, completely worked, right? So when the test was completed, the realization was that if you need a real-time availability of balances in nostro accounts for a particular bank, DLT can definitely support that. And then on the technology side, again, there were certain I would say, findings related to confidentiality, governance, and identity, which definitely showed an improvement since the last assessment that was done. So those factors were again tested, and it tended to be towards the improvement side. What were the conclusions? That the proof of concept actually demonstrated significant technology progress, yeah? However, to get these business benefits, there had to be some prerequisites in place. And again, I come back to the point that if this was a project which was done with the intention of building a solution for one bank or 5 or 50 or 100 or 200, it would have worked. But we're looking at 11,000, and we're looking at really taking the community at large towards a DLT-based solution. With that, there were these prerequisites which were identified. The first one was that reporting on liquidity in real time requires processing of real-time information by the suppliers of information, by the banks. So that's the first realization. That automatically drives investments into back office legacy applications and infrastructure. And also, from a standards perspective, it requires change to manage the interoperability between a centralized kind of standard versus different standards in use by the banks. The value proposition and the business case for such a change varies by the bank. And for various purposes, it may not be a strong business case for a certain segment of banks. And there's something called a UETR, which is mentioned there. It's a unique end-to-end transaction reference, which we introduced with GPI. Every single SWIFT message today payment message will carry a unique reference number. The finding was that needs to extend further down the actual payment value chain to make full value out of this kind of an investment. Without these 4 prerequisites in place, it was clearly stated that the actual solution will not deliver to the community. Now, what that led to was a view that let's work on these prerequisites. So Swift took a action then to make a change on some of these challenges. So we're encouraging the community to actually move towards more straight-through processing and real-time enablement of liquidity management. We in fact have completed a consultation and now arrived at a roadmap to move to a global ISO 222 standard over the FIN network or the SWIFT network so that it's a global de facto standard and it can also support DLT-based integration. And then extending the usage of the unique transaction reference I mentioned. And we continue to focus on our R&D and doing multiple proof of concepts like I mentioned. Especially on the security side, again, we focus a lot on actual proof of concepts. So our view is really that there is tremendous potential in the technology. We continue to explore, we continue to test, and we are waiting for the maturity to reach a stage where it can be deployed at scale. And when that happens, potentially, we'll see a different kind of deployment even within a Swift kind of a technology framework. There are multiple papers on DLT and thought leadership as well on it, which are available on swift.com. I'd invite you to visit and have a look. I think I'm over, so I'll avoid asking for any questions at this point. Yeah, maybe I can take one. Yeah, I can take one. Okay, go ahead.
Where do you see the strengths for a company like Ripple versus Swift and vice versa?
So the question is, where do you see strengths for a company like Ripple versus Swift, and vice versa? So let me state that from a wider payment service provider and fintech, innovation perspective, there are multiple providers today that are providing innovative payment solutions, right? Let me not single out Ripple, but let me say thanks. I'm just taking one question, so.
Oh, okay.
Yeah. So I guess what's important for us, and the way we assess this is, it's very important to see what's the problem that organizations are trying to solve, and we believe in really driving down into the core issues that, for example, as I mentioned, business process friction that's existing today across multiple business areas, and trying to solve for that with technology solutions and business solutions, right? Different payment players take different approaches to this. When you speak about speed, for example, right? So speed is something which is always very subjective. And many of the payment providers would talk about payments in seconds. That's often touted. But when you think about it, there are always processes at either ends that banks need to adhere to. There could be regulatory screening, compliance, et cetera, which is not really looked at from a timing perspective. Is that a component of that payment process or not? So what I'm trying to get to is it's very important to say what's the problem that's being solved today. If there is already a solution existing for that problem and a company is trying to solve that again with another technology, that may not be the best approach for a payment service provider. I think it's important to focus on the residual friction, the areas where there's really a pain point for banks. For example, it could be related to the whole liquidity aspect. There's a bit of, some banks face a problem with settlement and actually managing actual money flows. There are smaller banks that are dependent on larger banks, and there's an indirect model that tends to support. There are all these areas where there's residual friction in the system, which, again, there's some, I would say, payment service providers trying to solve for. So there's this element of having the right use case to work on, and as long as it's a use case that we are not working on, I would take it as a learning for us, right? So if there's something which we don't do today and which is being done by somebody else, I can take an example. Right now, for example, we are working on something called pre-validation. Yeah? It actually will test for payments data being validated before the payment is sent out. And actually it'll improve the efficiency of the actual payment ecosystem at Swift. It was not something we had earlier. We did not have a stop and recall in real time, a red button which somebody could press and say, I faced a fraud, stop it now. So these are learnings, I guess, from what's happening globally as well and the demand. And I would respect any payment service provider who actually does that today, and we don't. We learn from that. So I guess it's a good state to be in where you have multiple players doing certain aspects. But again, I would focus back on real problems and real solutions to that. Yeah.
Thank you. Thank you very much, Rahul. Give it up for Rahul, our man from Swift. Oh, you can take this behind.